Hey folks, welcome back. I am Jon Najarian, trying to avoid some of the bright sunshine here. Quick little meetings in Dallas with some family offices, and now jumping on another plane to head down to Mexico. But that's not why you tuned in. You tuned in to hear 3 at 3 and what's showing up. So let's get started. As you know, unusual activity is something that we track. When the algorithm shows us that there were really big buyers of calls or puts, we highlight those. I've got a couple examples for you, and then I'll discuss something really big going on in Credit Suisse as well. Here's that Twitter trade again from yesterday, just showing you that, yeah, last Tuesday, the 27th of September, we picked up that unusual activity. A lot of our clients were thanking us for it. Thank all of you for those thank yous and for the retweets. There is where those calls went to today, $6.12. So if you bought in for 65 cents and it went to $6.12, that's a pretty good day. It's a pretty good week. And that's exactly what it did. The open interest, still 7,400 open interest, which means 700,000 share equivalent at that 46 strike. Now, some have been rolling up, but a lot of them, I suspect, will just take the money off the table, as I have, completely out of that trade now. And Carvana. Thought I'd show you this one because, as you know, we talked about this for unusual activity when it was 2176, 5,000 of the next week expiring, 23 calls. So here's the discipline part of this trade, folks. Number one, it was very short term. The trade was only on for a maximum of less than 2 weeks because we talked about it early this week, and the exit would be the 14th if you held it that long. But as you always hear me say, the time decay for a trade like this, as well as the directional bias that you have whenever you're buying a call or a put, both of those work against you in that short-term trade that this clearly was. So I sold calls against my calls. I ended up taking the whole position off. And if you didn't do that, look at where it went to today. Now it's lower than where it was on Monday when we first identified this trade. So it traded through 23 and gave us a real nice pop and profit. And then if you didn't do anything, well, it reversed 8%. So again, DDA, discipline dictates action. So I think you need to always focus on that, especially with short-term trades like this one. If you'd like to learn more about how to handle yourself and your positions with those short-term moves that we so frequently find ourselves taking advantage of, well, go to marketrebellion.com/get started. That's marketrebellion.com/get started. And you can learn more about trading like we do, like professional traders do. All right. First of today's 3 at 3, a fresh trade in Teledoc. They're buying puts this time. Many of you will recall that I had a nice trade where I bought at basically the 52-week low, I think right around 20 bucks, and we were able to ride it into the 30s. Teledoc now, there's 8,800 of these options, November 25 puts. That's almost, folks, $2 full out of the money, beneath the market where it's trading now. So it's a short-term trade, but not as short as that 2-week trade that we just talked about with Carvana. This one all the way to the end of November, practically the 3rd week in November, leading into Thanksgiving. So I am buying the 26 puts, and my intention is to sell downside puts against them, but I'm not in a big hurry, not in the same way that I would be in Carvana, because this is not 2 weeks. This is a full 30 plus days out into the future. There's my brother Pete and I, and we want to thank all of you guys for following us. for subscribing to the YouTube channel. Remember, you can always pick up all of our videos, Pete's The Take, my short videos, my 3 at 3 videos, as well as, of course, the at 1 p.m. Eastern time when we do the Rebel's Edge. That also gets posted up on the YouTube channel. Just go to YouTube, search for Market Rebellion, click the subscribe in the upper left hand or upper right hand corner. Sorry about that. Upper right hand corner, you can click subscribe and or notifications, which would then let you know every time a new video posts up there. AJ Monty with his market outlook, Bill Johnson with some educational offerings, all of it up there on YouTube. So go to YouTube, search for Market Rebellion, click on subscribe. All right, second trade today, StarBucks. We see 4,200 of the this Friday 90 calls being bought. There's only 2 full trading days between now and this Friday because, of course, it's Wednesday today. So the stock is just shy of 90 and they're buying the at the money 90 calls. They bought 420,000 share equivalent of these. So again, that's something that I routinely want to follow because 400,000 shares of a $90 stock, you get the idea. It's a lot of money on the line for this trade, and I want to follow big money trades like that. StarBucks, October 7th expiring, 90 calls. Lastly, ICLN. This one I believe is that ETF for EVs, and 5,500 of those October 20s changing hands. You bet that EVs will be even more in focus because of the 2 million barrel cutback that we heard from OPEC Plus over in Vienna, and our friend Brian Sullivan, who's over there covering it. ICLN was $19.22. They're buying the basically 2-week and 2-day regular October, so they don't expire this week, the 7th, or next week, the 14th. They expire the 21st. So you've got a little bit of time, but you do want to be very quick to either cut losses. Remember, we all have them from time to time, or take profits. And I will be hedging 1-to-1 in all of the trades that I do that are this short term, because 2 weeks and 2 days, not a lot of time to be right. Lastly, I told you I'd tell you about Credit Suisse. They have traded some 55 or 60,000 of the 2-strike puts. Now, that's what the stock trading it for. Does it mean that they're predicting that the stock is going to drop? Well, in many cases, people buy out of the money puts like that because it would mean that it would have to lose half of its value, trade down from $4 to $2. So why would they buy those puts? Because the credit default swaps are so expensive now. And the fact that Credit Suisse is one of the firms that's active in trading credit default swaps means probably some of their counterparties are getting a little squirrely, a little worried about what might be happening with Credit Suisse. And for that reason, many of the people that own those bonds are seeking protection, which is normally in a credit default swap. And instead, they're probably buying those puts as that downside protection against a default by Credit Suisse. Well, that's going to do it for us today, folks. Again, Rebel's Edge is every Monday, Tuesday, and Thursday. So I'll be coming to you from Cancun, Mexico tomorrow, on Thursday. It's every Monday, Tuesday, Thursday, 1 p.m. Eastern time. Pete will be joining as well. And we will cover stocks as well as unusual activity, 1 p.m. Eastern time. And remember, that's always on YouTube also. It's on our website, Market Rebellion. It's on Twitter, streaming live, and then streams live on YouTube. And then it exists on YouTube, where you can always pick it up if you go to YouTube and type in Market Rebellion and subscribe. It's free. That's going to do it for me today, folks. Hope you have a great day. I'll see you tomorrow.